Let's take the conversation ahead with Gurmeet Chadha, Managing Partner and CIO at Complete Circle Consultants. Gurmeet, we thought we'll, discuss regular market or maybe some other stocks with you, but or maybe even insurance stocks. But now I have to start with the asset managers, given the headlines that have come in since morning. Now, we don't know. We'll have to wait for the amendments to be finally passed in Parliament. But if this does happen and debt mutual funds lose the benefit of indexation, then how do you see things playing up? I mean, for the category as a whole, and more importantly, then for the listed asset managers.
So clearly negative, Surbi, from what we make out from the first initial impressions we have. The impact to HNIs and family office is there, but the bigger impact is the role funds have played in, financialization of savings, including gold, including, moving money from FDs into capital markets. We do not have a very deep corporate market. That's well aware. And even SEBI has acknowledged the role open-ended funds play, in furthering this. Also, we have at a cusp of huge infrastructure spending, which needs a lot of market borrowing, and banks alone won't suffice. So, in general, the risk assets which are mark to market, get impacted. From an asset manager's point of view, I think the short-term funds would still make sense because those are for liquidity. So, which are liquid funds or money market funds, even arbitrage funds so far are tax efficient. So that also is a sizable portion. So that may not get immediately impacted, but longer maturity does. So these has a lot of long-term, implications in my view. One catch could be that 35% equity thing, which I think something can be maybe worked out. I don't know. You can maybe do arbitrage up to 35-40%. We have to see how it goes. I mean, we'll have to wait for the bill to be passed.
And other categories, Gurmeet, good morning. So there are debt mutual funds then, but gold funds and international funds and ETFs, all of them come under the ambit?
Absolutely. From what the current, whatever I have read, the gold fund, FOFs, everything comes. Hybrid, some of the debt hybrid funds, which are lesser than that category also comes. So we'll have to see, as I said to Sandeep, I think the first reaction is that you'll also see a surge for next 5-6 days if this holds true, because of the last opportunity to get indexation. Also, the older assets, then it doesn't make sense to come out, right? Because those are virtually tax efficient assets which are available for as long as you hold them. So mixed feelings as of now. I think we should wait for more clarity to come.
But Gurmeet, hybrids, I think most of the funds in that category, whether it is conservative, hybrid or balanced advantage, I think most of them are maintaining a little over 35% or in excess of 35% in equity, right? So perhaps they get spared. But I take your point on gold completely. I mean, the gold funds as a category then really lose their shine.
Absolutely, and we want the bond market to deepen, and more importantly, MFs are more on the active side. The other players are more on HTM side. So I think that also has to be taken into account. So it's not just the tax arbitrage part, which is just impacted, which is more short term. So I think we need to see how it goes. Even some of the hybrid funds are that, the old MIP, if you remember, Surbi, used to be 80-20. There are a couple of debt hybrid funds also. Obviously, the sizes. I think the biggest impact also would be on some of these target maturity funds, which has become like a 2 lakh crore in last 1 year. And large buying is largely in, AAA PSUs, GSEC and SDLs, which are the state loans. Also, the Bharat bond, which is actually a government-sponsored one, right? It's again a very large category, 50-60,000 crores.
Right. That's a self-goal of sorts. I mean, if it comes through, I take your point, Gurmeet, because a lot of these target maturity funds were actually investing in, government debt or basically debt of government companies. Maglam?
Yeah, I just wanted to know, from a policy standpoint, now that everyone we've spoken to is saying that this is a big blow, what could have been the rationale? What's the other side of this story? Why do you think this would have come? Is it because they want to deepen the bond market through corporates, or is it because they want to, grow the digital gold offering, which is made by the government itself? Just trying to understand the rationale. What's the other side of this story?
actually puzzles me, Mangalam. Could be the pressure from the PSU bank lobby also, for all you know, because it competes with long-term deposit. But I think we were coexisting. I think there is obviously pressure on deposits with the way credit growth has panned out. So there could be something of that. Insurance also, if you see the amendment happened, so maybe they want to have a level playing field on MLDs also, high-ticket insurance also. Let's get the MF also. Something could be more from that. But it doesn't really, I think the risk assets in an economy like us needs to be respected. Frequent changes in taxation is not healthy. I mean, you have to keep it stable for, long-term savings to go in.
No, got that. But this is positive. Now, how much is debatable, but positive for banks, right? Because banks were competing against debt mutual funds, with debt mutual funds on both the lending and deposit side. So maybe more deposit inflow and more lending as well. Corporates sort of borrow from banks on both deposit and lending side. This seems to be a positive. I mean, just kind of taking stock of as things stand right now and the implication. We'll take a quick break here. Gurmeet, stay with us. We'll get to the markets, individual stocks, etc. in focus. Mitesh Thakkar, Shrikant Chauhan will be joining in with their trading ideas, what to do this morning.